Good morning, everybody. This is Anshuman here representing Team 14 from Section B. The visualization I am presenting today has been designed considering the information requirements of both a fund manager and an individual investor. Though there are multiple dimensions that need to be considered before making a judicious investment call, keeping in mind capital appreciation and managing risk to protect investors' wealth, the dashboard that has been designed for the fund manager is based on four important indicators, namely economic indicators, asset class movement, sectorial growth, and sectorial indices performances. Through this visualization, we wish to infer whether the economy is growing or not. If yes, what are the drivers for the same? How are different asset classes performing? How are different sectors performing? Are they in line with overall economic indicators? Whether the sectoral indices are mimicking the sectoral growth or not. From the dashboard, we can infer that yes, capital formation is on the rise, exports are on the rise, GDP growth is is reasonable, savings are on the rise, imports have witnessed a steep decline, and inflation is well tapered enough, indicating that yes, there are signs of economic recovery. Also, when we look at the asset class movements, we witness that Nifty representing the equity asset class has performed or outperformed better than other asset classes, namely dollar, which represents forex, silver representing precious metals, oil representing the oil sector, and gold representing precious metals. And we see that equity as an asset class has outperformed, indicating that yes, while the economy is performing well, equity is a very important asset class to invest in. We also see that when we look at the different sectorial performances, we find that there has been a steep decline in the manufacturing as well as the agriculture sector. Also, the services sector is showing signs of decline, and the only sector that has shown any signs of recovery or growth is the mining and quarrying sector. And when we look at the sectoral indices, when we look at the IT, which is also been witnessing decline in lines with the sectorial growth chart as seen before, the only sector that has outperformed others is the healthcare sector, whereas the FMCG has shown a very muted response. Uh, this clearly is reflecting the aspect that while we need to invest in, while the economy is showing signs of recovery and equity asset class is performing well, healthcare is the sector that's attracting the biggest money. And once, similarly, if we look at the retail investor's perspective, since he's leveraging on the know-how or the knowledge of the fund manager who is having the wealth of experience and knowledge in the respective industry, um, the investor is clearly witnessing that large number of portfolios are having exposure towards the healthcare sector. So did the retail investor has replicated the same by investing in the pharma stocks. From the current visualization, when we look at the retail investors dashboard perspective, we witness that within last 6 to 9 months, the pharma stocks have all risen and they have done really well, which is also reflected well when we look at the financial performance of the company, where among the three companies that are taken under consideration, namely Cipla, Ranbaxy and Sun Pharma, the company that has outperformed its peer is Cipla Limited, where we see that not only are there revenues, that is the top line is on the rise, but so is the bottom line. And this is where we see that there has been a steep rise in the Cipla stocks in last 6 to 9 months perspective. Thank you.